All right, everybody, as expected and anticipated from my previous videos, the market is beginning to pull back to likely test some key quote-unquote support and resistance areas. And if you've been watching my videos from late last week and early so far this week, you'll see that this has been in our plan since day one, and we are prepared for it. Like I said, historically, guys, we are here to react to what the market tells us, not to predict what happens, because the market does not care what the heck you predict. So after today's big close candle, we're finally starting to see some of that seller pressure come in and buyers start to have to step aside. So like we've been discussing, when we're charting out our Fibonacci retracements, these are going to be the levels I'm going to be watching throughout the remainder of the week. We have already pushed below this key area of 857 because, and I call this a key area because if you're looking at the chart right at this line, we know that there was some consolidation here, but it was also acting as support. So 860 is the line that we're watching that we want to see how this reacts. Now, mind you, the key areas, the quote-unquote golden pocket zone that I'm really interested in is the 61.8 retracement because we had it acting as clear resistance for quite a while. And I'll depict that right here with the ellipse. We had clear resistance. And then if you look immediately to the right a few days later, because we are on the daily chart, it is now clear support. So I think we're going to see somewhat of a double bottom and then a re-push back up. I'm going to clear some of these for us just to make the chart a little bit easier to see. But we've already began our push down. I think we need to see somewhat of a retracement halfway back up. And like I just mentioned, guys, I think we're going to see a nice retracement through the 860 whole cycle level to retest this candle, maybe give it a wick test because of the imbalance that we already see or the quote unquote fair value gap forming before we push ourselves down. I still think we're going to see somewhat of a bounce or some chop. You are likely going to see some, I think you're going to see some support right in this area here around the 300 level. So we'll mark the 300 whole cycle level out as well. But the key area that I am most interested in, as I just mentioned, is going to be what we see right here, which is right at the 199 or the 19,200 level. We do have to rebalance these areas, guys. I think these are key levels for us to watch, but we're going to pull up some EMAs here and start to see what the macro sentiment is starting to tell us. But I want to do that as we go into the 4-hour time frame because the lower time frames are going to paint more of the picture. We already know that the daily candles are pushing us down. All well and good. Okay, so now we're in the 4-hour, but let's bring some EMAs into this equation because I think that's going to be a little bit of a key indicator here for us. So let's pull up the VWAP. We already know we're below VWAP. Here's the 10, the 20, the 50, the 200, and the 100. We already have the cross that I like to see between the 10, the 20, and the 50. So right here, we are already in bearish sentiment. So my overall macro picture is bearish. So I'm going to take off the 10, the 20, and the 50. We already know we're below that. So let's use the 50, 200, and the 100 for argument's sake. Okay, we already know that we're below VWAP and we're heading in to test the 100 level. Now, I know a lot of the bigger traders, funds, whatever you want to call them, they look at, if they even look at these macro indicators, the 100 and the 200 really give them the overall bigger picture. And you'll notice we are still above the 100 and the 200. Okay, all well and good. Let's look at what we see here on the 4-hour time frame. We already know that we have this imbalance here. We already know that we want to see this turn into some sort of clear, retest of this candle before we move down to have this support possibly turn into resistance again, or have this resistance that was once support that we see in this level turn into clear resistance. So that would mean we're going to likely test 20,000 and then move ourselves back lower. We've already done that once, but do we do it again is the interesting key. We're not going to know until we get to the 200 levels how we react in here. But one thing that I see the 100 already telling us is that we are likely to have some support within the level here. So if you look at this imbalance candle, whatever you want to call it, right here shows us that we might have a large amount of buyers from the 600 level probably to the 650 level as we retrace half of this candle. So looking at this, we can likely expect some form of a bounce before we come back up and retest. I don't know if we're going to see a lot of selling pressure. I think it's time we're going to see some sideways movement now. Although the sellers are stepping in pretty aggressively, we know where we're likely to bounce, retest. Let's go down into the 1 hour time frame. We're already heading down there, but are we going to see some bounce here? We have somewhat of a doji candle or some buyer decision coming in here to push us back up. We still have a large amount of selling pressure. Do we retest the 18,000 and move back lower? It's possible. And I think it's more than likely. We saw far too much buying pressure for us not to rebalance this market. And again, as we head into the fall, we already know we have a lot of FOMC decisions coming up with the rates. On top of that, we will have the Santa Claus rush. So we know that we have to leave some leg room for us to push ourselves back up. I still think we're going to close at all-time highs this year, especially being in the fact we're in an election year. But I think we as traders have to be very prepared for what is to be some sort of, turtle soup sort of sideways action for us to push lower. And I think that is pretty evident. I do think we're going to see some buyers step in around the 600 level, as I just mentioned, for us to come down and push back up and retest. But overall, my sentiment is still bearish. I don't think going into these lower time frames is going to help us anymore, mainly because the minutia is just going to start to show up. Some things to recap in this video, guys. We already know we're bearish with the EMA crosses. The macro EMAs, we're already below them. One thing you will notice is on the lower time frames, we are already below the 50, 100, and 200 moving average. This tells us we are going to retest and keep moving lower. I just said we're likely to retest 20,000. That would make complete sense for us to push lower as we're going to reject these EMAs. But the only thing that makes us think we're going to move sideways, or at least in my opinion, we're going to move sideways, is that when we get on the higher time frames, on the daily candle, yes, we're below VWAP, but as we go to the 4 hour time frame, we are still above the macro levels. Yes, the 50 we're below, but the 100 and 200 that everybody likes to talk about shows we might turn into support. So yes, indecision. We don't know. I don't have a crystal ball, nor do you. We have to be prepared. The point of this video, I am bearish in my sentiment. I am liking the short side and fading any sort of pop-ups. Do we run a chance of seeing some green days? Absolutely. I just think that the sellers are going to step in and keep this moving lower. I don't think we've moved low enough to start to retest the all-time highs again. That probably won't come for at least another week or two, in my opinion. We'll check back on this video and find out. But guys, please give me a subscribe. Would like to get to 1,000 subs and just keep providing these daily levels for you that I'm watching. Any questions, comment down below. Shoot me, any sort of insight you guys have, levels you're watching. Would love to share those with the community that we're slowly growing here. But other than that, definitely see you in the next video. Thanks.